We don't want to take up any more time because we have two amazing speakers from the Ada County Assessor's Office. We have the residential appraiser, Donato, and the commercial appraiser, Ron. And it looks like we're starting with Donato.
Kick it off.
Yeah, thank you so much. I got this trip line and you want to stand on like kind of right about there. Yeah, because that's your good side. Thank you so much.
All right. Hi, everybody. My name is Donato. I'm one of the residential appraisers at Ada County. I'll go over the single family dwellings and the residential multifamily, which includes fourplexes, triplexes, and duplexes. Ron will do anything more than 4 units. All right. For this year, pretty mellow year. Median sale price. This is year over year, January 1st, increased 2.41% to $555,000. Existing home sales, that sector price increased 1.87%, and new home sector leading the way with 2.43%. Number of total sales up 7.45%.
This is countywide, Ada County.
This is Ada County. Yeah, just Ada County. Overall, we're still experiencing a relatively flat housing market, stable pricing, steady absorption, and continued shift towards mid-tier housing. I looked it up. About 60% of the sales were between the $400,000, $500,000, and $600,000 price range. So,
what's your definition of mid?
The mid-tier was about that 400 to 600,000. It was about 60% of the sales. Yeah. In 2025 calendar year, we added 4,188 single family dwellings. That includes the ADUs. They're blowing up in Boise. As of late, I think it was 130 in 2024 and 82 last year in 2025. And I think Aaron sent out something that saying that Boise was allowing, that had pre-approved ADU plans now, between the 285 to 695 square feet that you don't have to pay for. So you don't have to go through the planning approval process. They're already pre-approved. That number increased 13.93% from last year, 3676. For assessments this year, we're looking at a 2% overall increase on average. We are time adjusting all the sales throughout the year, 0.12% per month. This is actually almost a third of what we saw last year. Last year, average increase was about 5.5%, 6%, and the time adjustment was 0.32. So we're slowing down quite a bit. Market is appreciating at a lower rate year over year. I have to have a disclaimer up there. When I say 2%, there is going to be properties that are going to be assessed a little bit higher, a little bit lower. So the average is 2% though. House bills, I started tracking these when they first came out. 2023 was House Bill 292 that gave us the credit. You guys can see that 2023 there was the first year where the credit came out. It continued with House Bill 304 for 2024 and 2025. That's still in effect this year. However, when the money runs out, so does the credit for the taxes. So Kathleen, I think you might have more information on it. I don't know if you guys track that with any of that stuff, but it's
statutorily, of course, there's that. The homeowner tax relief credit that's now in statute. Previous versions of statutory requirements was it was more of a surplus eliminator for the state's budget, and now they've had dedicated funds to that. So, to a minimal extent, we should expect that to continue for home owner occupied property.
there you go.
Great.
The other one is House Bill that's new for this year, 843. This one removes the proration for the homeowner application of the homeowner exemption. You can apply throughout the year, all the way through January 31st, and you get the full exemption. One thing that it would be nice would be to remove the cap on the homeowner exemption. Right now it's at $125,000. It would help owner occupied properties if we increased it. again, I heard it a couple of years back that they were talking about it, and then it just fell through the cracks, so.
Traction within the legislature. until
Yeah.
2016, when they capped it initially. That was Janet Moyle's bill, Mike Moyle,
Yeah.
figured out the minimum budget. Sadly, so it's kind of stuck at 125,000.
It should be more closely to 250 right now, closer to
Yeah.
that median range.
About 258,
Yeah.
if it was continuously trended as it was prior to 2016.
Yeah. Let's see, 2025, we occupied 16 duplexes, 1 triplex, and 8 fourplexes for a total of 25 buildings, or 67 units. Very close to last year, to 2024, with 26 buildings and 68 units. Right now, when I last checked, last month, there was 18 multifamily buildings, under construction.
What is occupying mean?
Occupied means that they have gone on the roll, on the tax roll. So that doesn't necessarily mean fully on the roll. It could be prorated for the year. You know, we put the occupancy in midway through the year, so anytime throughout the year. The assessments for multifamilies are projected to go down 1 to 2% on average. This was through a ratio study last week. We started working on the multifamilies late last week into this week, and that figures more on the -1% side. Again, with the variation, some are going to go up, some are going to go down, but that average is -1. There will be no time adjustment for multifamilies this year. Unlike single-family dwellings, we didn't observe any adjustments for time on these, so pure sales throughout the year. The data set that we're using is 134 sales. That includes the sales on multifamilies. We don't get that many, so we go as far back as the fourth quarter of 2024 into first quarter of the new year, 2026. And we only get about 3% of the total amount. We have about 4,800 multifamilies. These are the figures off the data set here. Rents are staying pretty stable. The actual reported rents, I did notice that the projected rents were decreasing. I never really, put too much weight into that until we, look at next year's sales. But these are numbers that we're looking at here. The residential side, unlike commercial, we don't have the capabilities of trending residential multifamilies through rents. So we use actual sales. So we track the rents, we track the GRMs. However, most of the trending is done through the actual sale prices. Pretty stable compared to last year, nothing out of the ordinary. And we actually got a few sales from Garden City this year, so I included it on here. I think it was 8 sales. All right, and we do continue the trend and do audits all the way through mid-May. The assessments are mailed out Memorial Day weekend, and the deadline to appeal, it's always the 4th Monday in June. This year, June 22nd at 5 p.m. That's all I have.
Thank you, Ron. We have questions, but I'm gonna clap.
Okay.
We have questions, right? Thanks.
What percentage of appeals are approved typically?
Sorry.
Approved as in
Successful. I mean,
successful?
the person making the appeal, what percentage of people actually receive the benefit from having made the appeal?
I think, do you guys have an actual figure for that you can disclose?
It is. Lately, it is dependent on, or it seems to be dependent on, I'm choosing my words carefully. On who the county commissioners are, because they sit as the board of equalization, they make the decision, not us. As of late, formal appeals tend to not get adjusted very frequently, but that said, we always encourage people to engage in an informal process with the appraiser. The appraiser's name and contact information is listed on the assessment notice. Very freak, I don't want to put words in anybody's mouth. That tends to be the route that, and in more negotiation and more settled values between the property owner and the appraiser. But the formal appeal process, the board, as of late, as of the last few years, keeping in mind that it's been the same board for, how long? 4 years now? They tend to uphold more values than not. And I will also preface it. We try to only go to a formal appeal hearing on ones that, A, we don't have the market data to support an adjustment, or B, we just can't come to an agreement with the property owner. Our staff are really great to work with. If there's a reason to adjust and the property owner gives us reason to adjust, and that market data is supported and legitimate, we usually come to some kind of meeting of mind.
If you know a commissioner pretty well, does that help?
You would have to have permission.
So do you, on the informal appeal, are there adjustments made?
There certainly can be.
Absolutely.
Yeah.
That's an excellent time to bring in additional data
Absolutely.
specific to your property. So that we can look at the market data that we have and bring your data in and make those negotiations. If the market wants that.
The earlier you get that information in and that discussion started with the appraisers, the better though. Obviously, I mean, with every deadline, the closer you get to the deadline, you know, everybody floods in at the same time. If you have questions or concerns, talk to your appraisers.
And Jerry, we often get, like us agents at Swope often get phone calls on this, and this is support that we'll provide. Usually first we start with the sniff test. And you're like, this seems off. And we'll be like, yeah, that does seem off. And then I take notes on the micro details, the monthly adjustments, which quarters they're looking at. And then we can go in and find comps if you really have a concern and sort of help give you the information you need. And we sometimes, you know, if it's Donato, we know him and we're like, here's what we've got, you know, we know what he's looking for. And it's like, yeah, you're right or you're wrong. But usually it's well received.
Okay, good, thanks.
Can an appeal, lead to an adjustment that's not in favor?
I get that question a lot. So,
Is there a backfire?
so
Sports.
I don't think we've ever gone that route. However, when I say hypothetically, you call me because you're wanting me to come out to do an inspection on the property, you think there might be some issues. The first thing I tell the homeowner is I can't unsee what I see when I walk in. So if in our system, your property is just your average, 1970 home, but I walk in and the whole thing has been completely redone, and in your eyes, it's still a 1970. In my eyes now, it's completely, it's a newer property, right? You've remodeled it, you have all the fancies, you've replaced all the stuff. I won't say that year that I'm going to make an adjustment up, but it's going to be reflected in the assessment eventually. So yeah, and I give, I tell all my homeowners that. I say, I'm here to do the inspection. However, this is what I have on my system. Once I see it, I can't unsee it. So.
We've never seen a commissioner actually raise a property owner's value. We've heard them.
Threaten.
But I've never witnessed.
Yeah.
I have, but in other counties. So it depends on the board, you're exactly right.
Awesome.
It's absolutely possible.
Possible, but I'm like.
Well, it is an election year, so you never know.
Yeah, they might be.
That bodes in you guys' favor.
Yeah. Thank you, Donato. I can't thank you when I'm looking at Ron's name. I can't thank you properly, but thank you. Good job. And we will, once Ron completes, I'll do the thing. Now I can say, thank you, Ron.
Oh, there we go.
You're welcome.
All right. Good evening, everybody. My name is Ron B. Roost. I am one of the commercial appraisers at Ada County. Specifically, the property types that I work with are multifamily. I've got some other property types, but this is what you guys are interested in here tonight. So we'll get started. New construction, we had 23 multifamily projects completed in 2025, which represents 3,213 units, which is quite a bit. Last year we had 24 projects at 2,058, so it's
Bigger.
quite a bit more, about 50% higher.
At this point, can you predict what next year will be?
Yeah,
Or should you?
that's the next slide. So the pipeline, we've got 28 multifamily projects that are permitted and under construction, totaling 2,160 units. We do have a couple projects. The Union 93 project, if you're not familiar with it, it's down in downtown Meridian. It's been in the news a little bit. It was originally projected to be 360 apartment units, and it's been dormant for a couple years now. There was some financing issues. Tommy Alquist and the Pacific companies recently purchased it at auction, and they have some new plans for it. So there'll still be a multifamily component to it. I don't know how many units it'll be, but they're working through that. And these numbers do include projects that have completed since the first of the year. There are an additional 22,065 units in the pipeline, which represent anything from just proposed through approved without permits. So there's a lot of projects that never get started, or they get changed to something else. So don't use those numbers. That's not a great number, but that just happens to be, you know, what it is. And that's actually gone down. It was almost 30,000 last year at this time. So multifamily sales. I've actually picked up a couple sales since I did this a couple weeks ago. So we've had about 12 sales occurred in 2025. Compare that to last year, or 2024, at 16 sales. So it's not bad. I've got the sales data on most of them for 2025. In 2024, I had this sales data on every single one of the sales. It was amazing. Average unit count was 47, median 48, so it's kind of right there in the middle. Cap rates, we were talking cap rates a little bit earlier. Cap rates for multifamily are a little bit higher than what you'd see in a fourplex. TOK, I tend to look at their data the most closely because they've been pretty good. They're reporting a 5.25% average cap rate, which is pretty much exactly what I'm seeing in the sales that I have. I take that cap rate data and apply it to my projects. And so to be a conservative, I start at 5.25 and work my way up. So the nicer, newer projects are going to be at 5.25% cap rate, and then the older stuff is going to be 5.75. And it is a little bit fluid. It could be a little higher depending on if it's a really bad property. So,
Ron, so does this cap rate, it doesn't have the taxes removed from it?
no, that is the raw cap rate.
Okay.
So when we value properties, when we're looking at the income and expenses, we'll take the taxes out of the expenses and then load the cap rate with whatever the tax rate is for that area that the property's in. So it'll be a tax loaded cap rate. You know, if you call me and we're talking about values, the cap rate that I'm using to calculate will actually be a tax loaded cap rate. So if it were in the city of Boise, it'd be about 0.9% higher. Eagle would be about 0.4%, and Meridian's 0.6 or somewhere. So it just depends on the area where that property is and the tax rate in that specific property. For reappraisal this year, like I said, I've got apartment projects, but we reappraise property only every 5 years. And so each year I take about 20% of my properties and reappraise that particular group. Last year, I reappraised all the apartments that were under 20 units, so 5 units to 19 units was reappraised last year. This year is pretty much everything else in apartments. What that means is I did a comprehensive study and looked at data for every single project that we have or tried to get data on every single project so I can compare them side by side, apples to apples, oranges to oranges. I took the data that I gathered and created a table or model that tracks. Basically, we got A+ properties at the top and D- properties at the bottom, and then everything in between. And we take the data, we sort them by by rents, where the A+ properties are the highest rents and the D- properties are the lowest rents, and sort them that way, and then start blocking them into different segments. For the properties that I don't have data on, then I look at that property and say, oh, that's like a C+ property. Looking at the other properties that I have that are C+ properties and compare what I don't have the data, the property that I don't have data for to what I have data for, and plug it in. So, thing to keep in mind, we're not assessing your properties based on your actual rents. What we do is we look at the market and compare properties together and come up with market rents for those properties. So if you have a C grade property, these are the market rents for the C grade apartment buildings for the most part. Now, there are going to be a little bit of changes in there depending on if you've got, maybe a 1-bedroom that's a very large 1-bedrooms that really rent more like a 2-bedroom. So the rents are a little bit fluid, but for the most part, you're going to be compared with properties that are very similar. You're not necessarily going to be your actual rents. Vacancy and expenses, just like you guys had heard earlier, vacancy still remains very low. We're at 5% vacancy for 2026, which is the same as we had last year. Operating expenses do seem to be increasing a little bit. So we did make some adjustments on our model for that. But overall, net operating incomes are mostly flat due to the increases in rents and then also the increase in expenses. So we'll look at some historical census numbers here. This is from the census.gov. You'll notice that in 2024, we had 11,126 people move here to Ada County, which is about a 2.12% increase. Any guesses on what our increase was for 2025?
5%.
No. No,
2.12.
not quite. 1.93%. Only 10,342 people moved here in 2025, and that's as of July 1st of 2025. That's when the numbers are hit from the census.
Do you get that information from Blue File, Idaho income tax?
Nope, all those numbers come directly from census.gov, and where they get it from, I don't know.
Oh, okay.
This is all Ada County.
This is Ada County, just Ada County. So we've got 546,000 residents now. The 20-year average increase is 2.27%. So we're a little below average, but if you consider every year we're increasing the numbers, the average is going to go down just a little bit if you're averaging or adding the same exact number because the number is growing. So the percentages are going to change a little bit. So we're kind of right in the middle of where we've been for the last 20 years.
Is that all ages? Well, baby or counted one?
Yep. Just residents in general. So we'll look at residential permits and lots. Permits issued were flat, basically 20 more than there was last year. So pretty much the same. There are currently just under 6,000 recorded lots. So vacant lots ready to be built on. And then there's an additional 31,500 that are in process from basically suggested to not quite finished. So a lot of lots in progress out there, which is pretty much how it always is each year. If you look at the overall from last year, we're down a little bit, but not much. I think it was around 32,000 or so.
That's just residential, that's not commercial.
No, it's not commercial. That's just residential.
Is that rezoning like from agricultural to residential?
Well, it's residential lots. So if you've got a piece of ag land that's 20 acres and you're redeveloping it into residential lots or have, then that would be included in this.
Okay.
Yeah. So the conclusion, we've got 4,185, pretty close. I think you had 4188. Yeah, so I was pretty close with the numbers that I got from somewhere else. So we've got 4,185 single family dwelling units. Oh, you know what? Is that right?
You said 2058 in 2024. You had 3213 in 2020.
Yeah, I had the wrong number on there. Sorry about that. So we've got 4,185 single dwelling units plus the 3,000 multifamily units. So my numbers are going to be off. You have to do the math for me. 3,213 plus the
7 something.
1,000, yeah, 7 something. Basically what that equates to is going to be, that's going to be what about 17,000, 16,500, 17,000 housing units based on the average household size being 2.5 in Ada County. And again, 2.5 people per house. That figure came from the census.gov. So what we're saying here is we've got 17,000 or enough space for 17,000 people to live here that we created last year, but only 10,000 people moved here. So we've got some excess housing.
This might be a silly question. Is the 2.5 people adults? Or does that?
That's just 2.5 people. It's kids too. Yep.
And so our total number of new units was 7,398.
Okay.
With the two numbers added together. And what's the household size? Was it
2.5
times 2.5? Okay. Yeah. So yeah, 18,495.
Okay. There you go. So we've got a little bit of excess housing. I did see another statistics this last week regarding how many adults are living at home still. So it looked at adults being between 18 years old and I think it was 30 years of age.
No, 32.
32. Did you see it?
30.
You're killing me. Anyways, I think it was like 18 to 30. But they said that 25% of that age group actually still lived at home with their parents in Ada County or in Boise. So quite a bit. And then compared it to all the different states, we were kind of right in the middle, honestly, overall. So, which I think basically shows that I don't think it's really a culture thing here. I think it's more of just an affordability thing. And as we get more housing units on the market, it will get more competitive and there might be an opportunity for those rents to go down. You don't really see that though, because the absorption rate is still really high. We've got a lot of new units hitting the market and their rents are still going up. So I'm not sure where that.
So why is that? Because that's been a story, that's been a theme where we've seen all these units being built. At one point, I had seen a statistic a few years ago that we were taking our existing rental supply and adding 80% onto it or some ginormous number.
I hadn't heard that, but it's big.
It was some big number from the IAA, but yet our vacancy really hasn't gone up much.
No, the vacancy's been very, very stable. The stabilized vacancy.
So with our 18,000 people units and our 10,000 people here. Does anybody know where those other 8,000 people are hiding? Or no, wait, they're not hiding.
They're not high, those are,
They're, oh, maybe they're,
that's lack of,
Surrounding
Yeah.
counties, Canyon County, be interesting to see what Ken can.
and that's just those, all those numbers are specific to Ada County, not the Treasure Valley, so.
right. Yeah, 30, yeah, maybe smaller, maybe is our household number going down? Well, it's not going down from 2.5.
I don't believe so.
Do we keep track of how many that's go offline or get polished? Like that?
I don't really see apartment units getting demolished, and generally when a house gets demolished, it gets replaced with another house or something else, or apartments. We get to see a lot of that too. They don't usually stay vacant too long.
But if we demolish the house and then build one, it probably get out of it, I don't know.
I don't know how that would work in our system, or
I mean, it would just be an extra occupancy for that year, so. The house is already occupied, it gets demoed and then it gets occupied again, so I guess.
depends on when you demo it.
Yeah, but technically, if it's done after the first, then yeah, it would count as an extra occupancy. For the year, so, but I don't know how many get, we don't get them in that one. Yeah.
You just found a couple of those. Yeah, I thought.
Do the ADUs create any kind of unique issues for assessment?
Yes, but not for me.
What?
They identified as a single family unit, separate unit? Two units on one lot.
So they are assessed, so if you were to build an ADU, you would receive, it would be two assessments. It would be
One assessment.
One assessment with, 3 line items.
Yeah, potentially.
Yes, so you receive, an assessment with 3 line items, your main house, the lot, and then ADU value. But besides that, there's no other difference to valuing it as, a residential home.
The challenge comes in that, the way our system works, we work on a very, very antiquated system. And we're in the process of getting a new system, which is great. Hopefully the new system will be able to handle these better. But we're looking at sales, and the sales come in, just all at once in big numbers. And if you've got a sale in there that includes an ADU, we don't really have a way to separate those out necessarily. So we've got to look at those individually very closely, and our trends are going to be, could get out of whack if we're not paying close attention. So we're not trending only properties that have ADUs separately from properties that don't have ADUs. It's not, our system isn't built to do it that way currently. So it is very challenging.
We're able to modify the value on ADUs to match a total value for the ADU plus the single family home. But again, you have to do that on an individual basis. So every single home with an ADU is considered on its own, depending on the size of the ADU, if it's categorized, actually, so on and so forth. So it's on an individual basis for everyone.
And so does the ADU count as another housing unit, or is that still considered one unit? Maybe we just
It's
found.
another housing unit, but we don't consider it like a duplex.
Right.
So, yeah,
So maybe we just found 82 more, because not all these ADUs are rented out, or some of them might be like short term or.
and most of the ADUs that I've occupied throughout the years, because I do talk to the homeowners, I'm always curious. The majority of them, 3/4, they build them for either their elderly parents or for their kids. Very few that, as far as homeowners tell me, get rented out. So it's mostly the older parents moving back or moving back in, they sell their house, or kids moving out. So backyard, yeah, yeah.
It's a multi-generational. home.
Exactly, yeah. Very few say, oh, I'm just gonna rent it out and make it into an Airbnb.
Why would it be different from the duplex?
Just the way we
assess it. I mean, we want the duplex to be that attached unit. And most of those ADUs are separate units. The size is usually different. They cap the size of ADUs to be much smaller than the main unit. So it just doesn't work in our system to be valued the same as a multifamily.
They're built at the same time, so we have to take into account your built and, you know, if
Appreciation.
you have a north end home that's 80 years old, but you build an ADU above, you know, you build a detached garage with an ADU above it, and you have, you know, the depreciation factor for each improvement is going to be that. And the construction cost might be different as well.
They keep changing that.
Wasn't it 900-ish?
They did increase it again. They kept it at 700 for a few years, and I believe they went up again. And they keep changing these, wanting to make them more available to people. So the laws keep changing, but I think they did go up from 700 square feet. And
I think it's 9.
Yeah, it's under 1,000.
Mhm.
yeah,
And it's more than 700. So
There
we
you
got
go.
a very small window there.
I think
It's not.
there is a rule though that you can't have it to be more than half. If it's a small main house, you can't have it be more than half. So if you have an 800 square foot house, you can't have a 900 square foot duplex. 80. Are you saying like if it's 800 for the main house? 500 square foot. I
No.
believe that was the case.
Yeah. The cap would be 400, but if you have an 800 square foot house, the play would be to pitch the city to call the 800 square foot house the ADU and then just build a bigger house.
And I've had people build an ADU, move in, and then remodel their house and do the addition, so I've had that too, yeah. And they have those, shipping containers or mobile, they just already built. And build them on, yeah, tiny homes.
That must not be very strict because we have a 1,300 square foot house and a 900 square foot ADU. So I don't think that particular
That might
law
not,
came into
yeah,
effect.
they might not be the difference.
That's true.
Does it have a garage? Does it have a garage?
Yeah, the 900 square foot ADU, there used to be a garage.
Okay, oh, so it's just,
That's part of the ADU.
wow, gotcha, okay, so I wonder if, grandfathered in buildings might have a big, right, yeah.
We didn't change the footprint, if we included garage, there's no change.
Gotcha.
You took the garage and the large family one,
Yeah.
made that an ADU.
It's good to know the commission.
You did have a question?
Yeah, out of all these units coming on board, are you able to, or do you know how many are CDH?
I don't track that.
Okay.
I mean, if you look at CBH in general, I think, gosh, I just saw I think that Idaho Business Review did a thing on builders, and I don't remember what his percentage was of the overall market. It was a lot, but
Yeah.
overall, we have a lot of small builders most towns, so him being the number one builder at even 10%, I mean,
Yeah, I've done like 5 different rental references this week that are just going to specifically to a CDH apartment complex, so.
oh, I see what you're
wherever
saying.
it was going.
He does have quite a few apartment complexes in town. Yeah, yeah. I think he still has a lot of single family houses that he's renting too. So,
Is there much difference in quality of construction?
in apartments?
Being a single family home. In terms of you got builder A and builder B.
Yeah.
I mean, there is a lot of a difference, but it is from an assessment standpoint.
Yeah,
So that is taken into consideration.
absolutely.
So, you know, you got a lot of builders that'll do like 24 on center on the floor drills. And then you get others who do 16 on center.
Mhm.
And cost wise, people don't see that. Home buyers don't see that. But there's a significant difference in cost.
If you look at the wall, you can see it.
Oh, yeah.
Yeah, I don't think there's I haven't been in residential for a little while. I think I only knew of 1 or 2 builders that would do it a little bit back when I was in residential. I don't know if it's gone up at all, but
I mean, it all comes down to the sales, so, you know, somebody buying a house, I know Hayden will do 24 because my mom has 8 moms and February 24th off center. But yeah, again, the people buying in those subdivisions may not be aware, and they're paying the market value, the market price for those houses. So, and we have to benchmark for those. So if buyers step in and they're buying a hidden home in a quarter barn at the same value, then those assessments are going to be the same, because we have to benchmark for those sales. Whether they recognize it or not, it doesn't matter, I guess.
It's a disincentive for quality builder.
Right, because they can sell it for whatever they want if they can market it well enough and hide those issues, but yeah.
Understood.
Thanks.
So we do have we're building more housing units than we're filling up. However, we do also have Micron building their new fabs out there in Southeast Boise. They're going to be hiring a ton of people for that. Washington just passed their millionaire tax that's going to hit in the next few years. So you're going to have an onslaught of people moving from Washington, even more than what we see now, because they don't want to pay the giant income tax over there. If you look at taxes in general, whether it's income tax, property tax, or sales tax, we've got very low taxes, honestly. People like to complain about them, but for the most part, we're very low. At best, we're in the middle amongst all the states. So for assessments, values on 5 to 20 unit properties, they're going to go up a little bit, maybe 1-2% approximately, based on rents, and generally speaking, the expenses on those types of properties don't go up quite like the bigger properties do. Because the 20+ properties were reappraised this year, those assessments are going to be all over the board. And I can explain it to you real quickly. When we reappraise properties, I'm setting the market rates for the studios at this for a Class B property. The 1 bedrooms are this price, and the 2 bedrooms are this price, and the 3 bedrooms are this price. And that's going to be pretty close to what the market is today for that property. Now, next year, I'm going to be trending that property. I'll be trending a property for 4 years, and then it'll get reappraised again in another 5 years. So next year, when I'm doing my rent study, I'm going to be looking at rents in general, not specifically studios, 1 bedrooms, 2 bedrooms, 3 bedrooms, 4 bedrooms. So I'm going to look at those averages, and it could be that maybe studios went up 20% next year. 1 bedrooms went up 20%, but 2 bedrooms only went up 5%. And 3 bedrooms, maybe we're flat. So I've got to average that out. And year after year, as I do those averages, by the end of that cycle, I could be all over the board. So the nice thing with the reappraisal every 5 years, we get a chance to reset and relook at properties and make them right. And as you see, at the end of the cycle, it's when I tend to get more calls. So last year I had a lot of calls, but people are like, there's no way my property's worth this. And you look at it and you look at what they're getting in rents, and it's like, well, my market rents were probably trended a little high for that particular property because of their unit mix. Not every property has the perfect mix of studios through 3-bedroom units. A lot of them are just 1 bedrooms and 2 bedrooms. Maybe the 3 bedrooms are the ones that trended up really high, 1 year or something. So the reappraisal properties tend to kind of be all over the board. In general, I think overall values are fairly flat, but you're going to have properties that are going to go up 10, 15, 20% because the way that the trends hit them previously just was outside the normal. And then you've got the other option where sometimes we overtrended properties because of the way the rents trended, and maybe they're going to go down a little bit this year. So that's kind of the reason why reappraisal properties are kind of all over the board.
Reappraisal being within that. So appraisal is done as of January 1st. Is that correct?
Yes.
In theory, it's as of January 1st.
The appraised value is as of January 1st.
And 20% every year you physically look at.
Yep.
You go out and look at 20%.
Go out, take a new photo.
And the other
80%.
Then you're doing basically the
Market analysis and trending. Yep.
there's the explanation on the fluctuation during those years.
Yep.
It basically trues it up.
Correct.
Every 5th year.
Yep. So we're a market value state. So we're supposed to appraise properties at 100% market value every year. And we can be within 10%, plus or minus 10%.
Do you have any issue getting sales that?
Yeah. Yeah. Commercial properties specifically, residential properties, we have MLS. So we've got lots of data from that, but not a lot of properties on the commercial side go through MLS. So it is a little tougher to get that. I do have a lot of contacts, other commercial brokers, appraisers they'll call and ask for stuff, and I'll ask for them for stuff and then get sales that way. If somebody appeals their property, a lot of times people will call in and say, I just bought this property and I paid this for it, and you got it assessed too high. First thing I ask for, send me the appraisal. So the appraisal not only includes the sale for that property, but it's also going to have 5, 6, 7 comps that I may not have sales information on. So I get a lot of sales data that way as well. So
you're scrapping wherever you can then.
absolutely. So and then also, if somebody calls in and maybe you're wanting to appeal your property, but it wasn't your property that sold, but maybe somebody else's property that sold, and you have the data. I'm not particular. I'll take whatever data you got. So I usually do a pretty good job. And the data that I do have matches pretty closely with the trends that a lot of these bigger brokers like TOK, CBRE that they're posting, and what they're reporting is pretty much right in line with the data that I do have. So this year was a little bit less than last year. Last year I had, like I said, every single sale I had the data on. This one, a little over 50%, but still not terrible, for what it is. If you feel your assessment is higher than what you could sell your property for, give me a call. We can talk about it and kind of see where we're at. Generally, what I'm going to ask for is 3 years of income and expense statements, along with the January 1st rent roll. If you have any sales comps, appraisal, BPOs, any of that kind of stuff, I'll take it and we can talk about it. If you don't like what I have to say, you're always welcome to file a formal appeal with the commissioners. If you don't like what they have to say, you can then file to the Board of Tax Appeals. If you don't like what they have to say, then you can go to the district court. So you've got lots of options. The most important thing, though, is you have to appeal by the 4th Monday of June by 5 o'clock, which this year is June 22nd. If you do not file your appeal by that time, there's nothing I can do for you. We can still talk about it, and if an adjustment's warranted, I can still make it. There's still a small window I can make an adjustment in, but you don't have any rights to appeal your property after that. So if you don't like what I have to say, you're stuck with it for a year. So, any other questions?
Ron, you said that values are going to be pretty much all over the board for commercial 5+.
On the reappraised properties, yeah.
On the real, okay.
It's
So-
20 plus units.
Oh, the 20+ are all over the
Yeah.
board. And then what did you say?
5 to 20 is going to be about 1 to 2% increase.
1 to 2%. Okay.
You want the January 1st rent roll because you want to see who's in there when it's being assessed.
What I look for in the rent roll is I look at all the rents, and the rent roll also have when those leases were signed. So I can look at which ones were the last ones that were signed and what the rents are that you're getting for those. Because a lot of times property owners will have people in there that they've had in there for 10, 15 years, and they have below market rents. I have to assess properties at market rents. Whether you're getting market rents or not, I have to assess it as market rents, because if you were to sell it, that's how it would sell.
So you can't just have all your concessions in January.
Nope. No. Any other questions?
Would it be a good plan for AVID investors to bring you guys donuts on occasion?
Yeah.
I love it.
We love donuts. We love donuts. I think that's it.
All right,
Yep.
well, let's come on up, Donato. Oh yeah, well, Ron, Donato, thank you so much. you guys are, there's such a wealth of information. I'm so grateful that you're sharing it with all of us and,
We'll get real close together here, scoot in real good. Okay. Oh, actually, I'm gonna stop screen sharing for this and see if we can that whole thing again. Okay.
I look good.
Okay. All right. AVID Investors, Donato, Ron, residential and commercial appraisers with the Ada County Assessor's Office, commercial assessors. Thank you so much for letting us know what's going on in the market with values. Here's what I heard. 60% of the residential housing units are in that 400 to 600,000 mid-range is what we're looking at. And we added a bunch of them, but in general, what people are going to see is about a 2% increase in your assessed values. That's just on average. It's going to be individual. For the multifamily 1 to 4 units, we're looking at maybe even a small minus 1% decrease in assessed values. And then for commercial units, we're looking at maybe 1 to 2% increase in values, except where there's, and that's 5+, except for where there's reappraisals going on individually. And we're going to get those notices on Memorial Day. And we're only going to have a short amount of time to appeal, but the best way to appeal, as we discussed, was definitely looking at that name on your assessment notice and starting informally first, and doing it sooner rather than later. In terms of commercial, we heard that cap rates are down a little bit in 2026 so far, and the cap rates for commercial are slightly higher than what we're going to see on fourplexes. We're at Swope Investment Properties always looking at that fourplex data. They're going to go a little higher in the commercial. They're at around 5.25%, 5.25%, depending on age. And these guys, when assessing rentals, we're not looking at actual rents. We're looking at market rents. And so, and factoring in, it looks like grade A, B, or C property, and probably about 5% vacancy rate is what you're looking at in there. Increasing expenses and increasing incomes have created a kind of flat NOI this year compared to last year. And we've got about 74, between both the commercial and residential, about 7,400 new units. And that translates times 2.5% people per unit into space for about 18,500 humans. And we only had about 10,000 move here last year. But yet somehow our vacancy is not going up too high, and the market seems to be absorbing them from what we're seeing. And everybody's happy. We had a 1.93% increase in population last year, they reported. What else? That's it. So we have Donato, we have Ron. Thank you so much for sharing your information.